So, Brian, in the next 6 to 12 months, because there seems to be some volatility, what do you think the markets will bring, and what should high net worth individuals watch out for as a result?
Well, I mean, markets may continue to drop, and markets dropping and your portfolio dropping can be two different things, by the way. Just want that to be clear. A lot of people think that they're 100% correlated, and they're not. So, or your net worth, right? So we'll talk about things that may be able to protect.
Meaning it could be a positive, meaning the markets could go down and you could go up?
Right.
Or vice versa?
Or
the market could go up and you...
Or stay the same. Yeah, it depends on what asset you're in. It's not everything's correlated to the market, right? Now, so banks, well... they said they're not going to do the Silicon Valley Bank thing anymore, right? They're not going to bail
them out,
bail everybody out again. So.
You trust the $250,000 FDIC insured?
No.
You don't trust that?
No.
I talked to a friend who has a lot of money in the bank.
Mm-hmm.
He was scrambling to put money in different places so that he didn't have more than $250K in each account.
Yeah, I mean the big question I would say is like, why would you want that much in a bank?
Just sitting there.
Yeah, I mean, business owners like that are doing really well sometimes will have that amount, but it goes out fast, right?
Well, I think they might have tax because he invests, so
right. But
it's capital for investment,
right? So if you're investing, that's fine. There's time periods where business can have a lot in a bank account, but for the personal to have that much, no need. There's plenty of investments that you can go right now that are paying higher interest rate than the bank, that you can get 5% or greater, and you don't have to put it all in one bank, right? So, but high net worth individuals feel the need for a large amount of cash or cash-like instruments. So, where do they put their money into? Well, real estate. We talked about crypto. We know how I feel about that. So
don't think you want to do that.
I'm not going to go down that road again. Other stocks. I mean, a lot of dividend-paying stocks, while they haven't done great this year, when you look at recessions, actually have outperformed all other asset classes because they are large companies that have been around a long time, sometimes, since the 50s or 60s or the 20s. And they've been paying a dividend the whole time through how many recessions and depressions, and they've seen it all, done it all, right? They're maybe the consumer staples. I'm not going to mention a name and think that I'm recommending one company, but the large, consistent dividend-paying stocks actually is not a bad place to put it. Will they go down 10 or 15%? Yeah, they may, but if they do, it's probably because the market's down 35 or 40. And they're going to rebound just as fast, if not faster.
Yeah.
Right? Because they're financially solid. And, the companies that have been around and consistently earning money. So, I don't know. There's real estate is scary, but it's scary in the sense if you're not getting cash flow, right? If you're investing in cash flow real estate, where you're getting income from it, and even if
which is the reason you do that to begin with, I think.
True, but not all. You can buy land and it's not cash flow positive.
Yeah, that's true,
right? You buy land, and you're hoping for the appreciation, unless you're hoping to flip it, right, and make some money that way. But if you're just, I know people that have 2 or 3 homes. They buy the lake house and they buy the beach house and they have their main home at home. Look at 3 homes. 2 of them you're just getting. It's dead weight.
Well, you're paying property taxes and
I mean, it's
power bills.
Yeah, and for all the costs it is, I'm like, goodness gracious, how many vacations you could go on?
Lawn care and
right. Yeah, tax, especially when you're at the beach. All the cost of owning a beach house is insane. One of our clients just sold one, and we were looking at the cost of maintenance for that thing. I mean, it's like $30,000 a year, $35,000 some years, $40,000.
Need to Airbnb that joker.
No, that was the cost. They were making rental income, but the cost to maintain it because you're pressure washing the deck every year and restaining every other year because the
salt water's hard on stuff
everything.
Too, isn't it? Yeah,
it's hard on everything.
Yeah,
and insurance is through the roof because you're on the water.
So those people, what would you say to those people when you say, why would you have that kind of money in the bank? There's risk of being overly conservative. Yeah, that could hurt.
Yeah, I mean, it's just dependent on how long you're going to do it for. I don't care if somebody has a lot. I mean, we've seen, we had a recent business owner client came in at somewhere in the neighborhood of $3 million sitting in a bank account, which I was like, okay, so what's your plan with this? And he went through his long list of things that he wanted to do, but he was also kind of stuck because he was dealing with a financial advisor who all he wanted to do was put in the stock market. And my question to him was, how do you want to take this money and make it grow your business? It was a big difference. His financial advisor wanted to take it and put it in the stock market because he makes money that way. But I looked at his assets and said, well, his portfolio has grown maybe at 4 or 5% over the last 10, 15 years.
Mm-hmm.
Your real estate that you own at your house, in Roanoke, Virginia, probably done 5%, 6%, because when you take out the costs, it really hasn't done that well because you have to live there.
Yeah.
But then we look at your commercial real estate that you own. Okay, you probably done 7 or 8%, with cash flow, maybe 10. Then we look at your business. You've been growing at 30%. So which one should we put more money back into?
Smart.
Which one do you think is going to grow more? And he goes, you're the first financial planner. He's been interviewing all of them from Blacksburg to Lynchburg, Roanoke. He goes, you're the first one that's telling me to put it back in my business. And I'm like, well, yeah, it's your greatest performing asset class, and you understand it. Explain the mutual funds and the ETFs and everything that you're invested in.
It's a great point.
Inside of your financial advisor's account that he manages for you. He goes, I don't know. I just trust him. I don't know what he's doing.
Yeah.
Right. I'm like, okay, well, you understand he's like, yeah, I want to grow it. And here's my plan. I'm like, let's help you do that. Let's give you the advice so you can, because exit planning for, we talk about exit planning. A lot of people think, oh, well, but I'm not going to retire. Yeah, exit planning is planning now because you don't know when you're going to exit.
Right. But you might not want to now, but 10 years from now you will.
Well, look at the hospital. It's full of a bunch of 40, 50-year-olds that didn't want to be in the hospital. They're on their, they're unfortunately,
yeah,
could possibly taking their last breath right now.
Mm-hmm.
And they have businesses. They have real estate businesses. They have jobs, and they haven't gotten their will, their trust. They haven't protected themselves to make sure the assets pass on or the business passes on to the next generation. So let's protect it in the sense, right? Make sure the value is going to be there, whether you're there physically or not, right? Let's get that set up, and then we can grow this thing.
I know it depends on what it is your client was doing and what the business is, but when you say putting it back in the business, you just mean whatever you can do to bring the value of the business up. So if it's buying new equipment or
right.
remodeling something or putting it back in.
Right, so we would look at the profit and loss and do what's called a value acceleration analysis, right? So we're going to look at so let's say, for example, your gross in business growing $5 million. And we're going, okay, well, the average in your industry is spending 10% on marketing, and you're spending 1%. And you're wondering why you're not growing as much. Or, your overhead is really high compared to the industry, right? Why is that? Why do you have so much overhead? Well, I'm employing my brother's friends and my sister and,
yeah.
I got all my buddies from high school, right, on the payroll, and they're not really working, Okay. And then, just like you can really analyze things based on industry averages in their industry and go,
how do we increase the value?
Yeah, we got to increase the value because you got a good valued business here. But what if we can double or triple that thing in the next, 10 years or less?
So here's the question. If the market and economy take an even steeper hit, will the Fed reverse their rate hike decisions? I mean, I know you can't speak for them, but I'm interested to know your thoughts.
Reverse meaning they're going to drop them?
Mm-hmm.
Potentially, yeah. They do it all the time. I mean, they try to control the economy by raising interest rates, and then they're going to cut them. I don't think they're going to raise them. I could be wrong. Don't throw bananas at me or tomatoes or whatever. if they don't. But I don't think they're going to raise them anymore. I think there's too many indicators in the market that are saying, okay, things aren't that great.
We're on the bubble.
We're on the bubble. The bubble's bursting. The bubble is bursting in real estate. I just had a kind of disagreement with a real estate agent
Oh boy.
last week, and he was talking about his area. And I don't want to say what area it was because he might be listening.
Give him up, yeah.
But I said, you might want to go and look at the listings and the price decreases out west and in Florida, wherever it's hot.
That's where it starts.
It always starts out
always
there.
The trend starts there.
Yeah, because the market in 2006 and 2007 was dumping, and I came out here and bought a piece of property in 2006, and everything was gangbusters out here, and people had no idea there was a recession going on. I'm like, can I take you? I'm going to film subdivisions that are all developed, have this, the schools built. They're planning the supermarkets in these huge planned communities. I mean, 10,000 homes, but there's nobody building anymore because there's no more money. The banks dried up. There was no wealth, and out here they're like, oh, everything's going great.
Yeah.
Because the wave, it's like a tsunami. It takes a long time to come through the way, to the ocean.
I just wish they would have told me about cargo pants. When did cargo pants not become a cool thing? That started out on the West, and then all of a sudden now cargo pants aren't cool.
Right,
Thanks for telling me.
I think they're actually back already.
Are they? Oh, good.
I thought I saw.
I'll just keep on wearing them then.
I saw somebody wearing them. I literally stopped in my tracks, and I'm like, look at that.
Was it me?
No.
Okay. 866-2-PLAN-4, the number to call. 866-TO-PLAN and the number 4.